Wonderful good day, ladies and gentlemen. Precious Metal Summit 2015 here in Zurich. And with me here is Florian Siegfried from AgaNola. He's a fund manager there. And the last time we spoke was in May. Markets were still, ugly. We can say that, I think. And so, since May, Florian, great that you are here. And I think we spoke the last time that maybe the market is going into a bottom now. What is your opinion?
Yeah, first, thanks for having me, Jochen. Always a pleasure. Yeah, in May we were of the opinion that, the market was some sort of bottoming. It was slowly moving, not really exciting. And I think we are still there. So, but probably we're getting closer to the end. When I look at it from a technical perspective, it gets more exciting, especially after a strong October. But nevertheless, the market is highly divergent. You have a lot of stocks really not performing, still disappointing shareholders because they are not profitable, burning cash.
Write-offs.
Write-offs. I think
Dividends
write-downs.
today,
Yeah.
was a lot, yeah.
I think that's probably priced in, but what you want to see is, can these guys make free cash flow? Are they making money operationally and can they sustain their investments? So that's still
So you think we are, right bottoming out? You think this will be, ended by Christmas, hopefully? So 2016 going to be maybe a better year? Or what are your thoughts on?
I think it depends on the overall market. So you have seen gold stabilizing after the crash in August, on August on 24th. So this is what you want to see when you get turmoil in markets, in credits, in equities, gold holding up. And I think that is some initial sign that which makes me more positive. So you see more diverging markets. Overall, credit spreads are rising. So the technical picture, in my opinion, is not as good as it probably looks like. And I think that is forming a good bottom for gold. And on the other side, you have the gold mining shares now really getting some momentum, which you didn't see for the last few years at all. So I think that is more positive.
Okay.
I wouldn't say positive, but more constructive. Yeah.
Okay, good. Constructive, I like that. Okay, as you are a proactive fund manager, and you, let's say, okay, you are allowed to hold cash, of course, but still you have to invest. So what are, your favorites, or what are in general the companies you will touch now? What is it of interest for you?
I think you have to capture the sentiment in local markets. I think sentiment in Australia is extremely strong. You have companies, up 200, 300, 400% year to date. That basically is the result as the Australian dollar is very weak and gold in Australian dollar is at 1600. So we're trading at a 2 to 3 year high. And when you look at the channel, we are in that band moving higher. And so those companies are getting good margins, and multiples are not as cheap as they used to be. But this is a market that I think you can follow, probably also Canada. I think the smaller producers is still what I like. You have much more visibility when you have a company with 1 or 2 mines. You can ask the question, how much capital do you still have to reinvest into the business? You find out, are they profitable based on their earnings, and you can paint a picture, or is this a free cash flow generating companies probably the next few quarters, and those are the names I like. So I think play the currency a little bit and hedge the risk, yes.
Can you name some of your favorite companies? You want to name that?
Yeah, I think one of my most favorite companies is still Santa Barbara. It has been a very good performer this year. It's been a turnaround, but that's the classical high-grade gold mine in Australia that gets all the currency benefit. It's deleveraging the balance sheet, very strong margins at current prices, very good grades. And reinvesting in their business. So they they came from 4 mines to 2 mines and making more money with 2 mines, making more cash with 2 mines than before. And the market is appreciating those, So I think these are things you can watch, although the momentum is really a little bit on the high side on this one.
Okay, let's try a little bit a look into the crystal ball. What is your feeling for next year for gold and silver?
Oh, always difficult to say.
I know, I know.
I would stick.
That's why I'm asking.
Yeah.
You're a professional.
But I think the upswing in the market or the bull market in gold and silver, when you price it in most local currencies, is already underway. But it's not yet in US dollars. So I would say those currencies are probably, with zero interest rate policies, currencies probably going more to the south. So this trend will continue. The question is with the dollar, if we get a serious setback somehow with some sort of issues where everybody has to liquidate positions and is running into dollars just to unwind some trades, then the dollar could become stronger. But it's not really what I believe. I think the dollar is really somehow topping, and that is basically also good for gold. But I wouldn't be in the position to give you a price target, but I think the trend is changing to the upside slowly.
Okay. So we can say at least above the 1200, hopefully.
I hope so. Yeah. It's this is what I would like to see, definitely. Yeah.
Good, super, Florian. Thank you very much. All the best, and speak soon to you.
Yeah. Thank you. Max.
Thank you. Ladies and gentlemen, it was Florian Siegfried, fund manager from AgaNola. And you heard it. We are bottoming at the markets, and he likes, of course, producing assets, especially also Australia through the currency advantage. And he's more positive for gold and silver next year. Unfortunately, he's not giving us a price target, which I can really understand because it's really tough to say that. And he sold, as I did, the crystal ball last week, so we cannot have a look into it really now. So from that perspective, we will see what's coming. Interesting is we have the bottom, hopefully by Christmas, and 2016 hopefully will be finally better. Thanks. Bye-bye from Zurich.